All right, everybody, welcome to week 24 of selling weekly lottos. Every week, I put my cash and my shares on the line by writing options and for a potential gambler or speculator to possibly win. All right, and that's how I make passive income. Let's start with the disclaimers really quick for anyone who's new. Number one, all my positions are covered by shares and cash, and I don't use margin. Number two, I'm happy to be assigned. I'm totally okay with it. If my shares get called away or if I have to buy the shares, I signed up for it, all right? And then number three, this is not free money. Some people call it free money, but not me. There's a risk because it's investing, all right? That being said, the winner this week is the Gambler. Can you believe it? Their second win out of 24 weeks, and they broke my 15-week win streak. The Gambler won this week, guys. It happens. All right. This week, I lost $997 using $176,500 in collateral. That's about a negative 0.5% yield. All right, do it the same as last week. We'll go by each position one at a time. So, boom, first one, NVDA, 175 puts. I sold 3 of them for $580, and I was able to buy them back for $33. That's about a $540, $550 gain right there. All right. And let's see what happened. Let's see what I was thinking when I did this, all right? Hoya! All right, so what I was really going for was just an earnings play. NVIDIA had earnings, so I wanted to just throw a bet out there. I thought 175 was pretty good. If it goes below that, I'll buy the shares. If it stays above that, I'll get the premium from the puts, all right? So while I was following the line, just remember, guys, if you've been watching these videos or if you're new, none of these lines are technical analysis. They're just the parameters of the contract that I wrote to help visualize what's going on. All right, the main thing here is the yellow trajectory line going downwards because it's cash secured put. So it was following the line, and then the day after earnings, NVIDIA went up, and I took the profits because the contract went down 95% after earnings when it went up. So I was like, hey, give me those profits. All right. Let's see the second one. All right. Boom. Hood. Now you've seen my videos. If you've been watching the last few weeks, I just put these Hood cash secured puts on repeat because I sold them at 140, 141.5 a few weeks ago. So I've been trying to get the shares cheaper. Now, as you can see here, Hood went down way past my loss line. So I actually was assigned 300 shares, and because they were at 107.3 when I got assigned and I had to buy them for 118.33, I considered that a $3,308 loss right there. Okay, now here's the thing, it's not actually a loss in your like taxes or in your brokerage statements. It's just buying the shares. So I just had to buy the shares at 118.33, but to better reflect it on my metrics, I interpret it as a $3,308 loss, because if I didn't sell these contracts and I just bought the shares on Friday the 21st at close, I would have got the shares for $3,300 cheaper than I had to buy them for. So that's what I consider a loss, all right? All right, let's look at the third one. Boom! Google, okay? 285 call. I sold that for $218, and it was also assigned. All right, let's look at what happened. Boom! Google went up, all right? So it went way past my call covered call strike, all right, ended up at 300. So I had to sell my shares, and I got a $1,040 profit from selling my shares, but I did leave about $1,250 on the table that the gambler took because they got to buy my shares for $287, but it ended up at around 300. So they got the win there, and I got my shares taken away from me. All right, I don't mind. I told you in the beginning, I don't mind. All right, and then the last one, boom, QQQ. All right, the first of this kind in my last 24 weeks, selling a covered call on QQQ. Sold it for about $740. Bought it back for $10. That's about a $730 profit. All right, let's take a look at what happened. All right. Oh, yeah. All right, so this one is interesting because although I got a profit from selling the covered call didn't protect me from how much QQQ went down. So it actually closed around 590. I took the profits when it was 585, but on the Friday it ended at 590. So I kept my shares, but my shares went down by $1,500 while I only got $750-ish from the contract. So technically this was a losing position. I actually lost $750 in unrealized gains, but I don't really count the unrealized gains. I'll show you in the benchmarks how I do that. But this was a losing trade if you're a trader. All right, if you are doing this as a short-term trade, this would have been a losing position. But for me, I'm happy to keep my shares of QQQ and possibly even buy more if it goes down more. So I'll just be considering the income gained and just, you know, the unrealized losses, unrealized values, they change every day. So not a big deal to me, but this would have been a losing position if you're a short-term trader. All right, so those were my positions this week. And let's go ahead and take a look at the benchmarks. It's pretty interesting how one loss can change them, all right? So, bazam! All right, let's minimize it down, all right? Just the metrics. All right, so you can see here, one little loss absolutely crushes all my metrics. Now, the main ones I'm looking at is my annualized income and my estimated annualized percentage yield. All right, my annual income actually dropped by $5,500 just by losing $1,000 1 week. My yearly potential went down by $5,500. All right, and then my estimated annual percentage yield, my projected yield, also went down by 5%. All right, but still looking pretty good. If I can continue at this pace for the rest of the year, okay, I could still make $73,000 at a potential yield, an estimated annual percentage yield of 55%. All right, so yeah, that's it. So just some closing statements. There's a lot of misconceptions, misunderstandings of this strategy. I get comments all the time of people saying I'm gonna lose everything 1 week, and this week shows that this strategy, you don't lose it all on one bad trade. Not like buying options. It's really this loss was more like any sort of investing losses, any traditional investing losses. So, and I didn't even do good. I actually did the theta gain equivalent of buying high and selling low. So I did the opposite of what you're supposed to do, and I consider this a pretty forgiving loss. I don't feel too bad about it. $1,000 lost at $176,500. I know some people that lost tens of thousands, $20,000, $30,000 last week when it was like the market was tanking. So I consider this pretty good. All right. That's all I gotta say. If you've got any questions, write them in the comments, and I'll try to LE5, explain it like I'm 5. Other than that, thanks for watching, and I will see you next week. Peace.